Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, August 7th at about 2:30 p.m. Eastern. Well, the S&P 500 rose today as traders interpreted an unexpected loss of jobs in July as meaning the Federal Reserve won't need to raise interest rates soon, good, and can leave monetary policy on hold for now. Stocks are headed for a second straight week of gains. The S&P 500 has risen more than 3% week to date, while the Nasdaq could post its best weekly performance since April with a rise of around 5%, thanks to a bounce back in chip stocks. So now, as we always do, we're going to go on and look at three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows the S&P 500 benchmark index, and many stocks, majority of stocks in the market will follow this to the upside or downside. Now, when I captured this chart today, the SPY was trading at $771 and change, near the all-time closing high on August 4th, right back here. That was a closing high on August 4th at $772 and change. Now, we can see here that the SPY is trading above the red line, the 20-day moving average coming in at 750, certainly above the 50-day moving average, the green line that's coming in at 747, and above the 200-day moving average, which is coming in at about 702.95. We're going to call it 703. Now, in January and February of this year, look left on the chart with me, please. The SPY was trading in a range here after making a wonderful uptrend. It was trading in a range between 676 and 697. That was in January and February. Then on news of the Iranian war, it fell down to 629 in March. Then it rebounded dramatically back over its moving averages up to this June 2nd high here at 760, then dropped to 723, rallied to 757, then fell down and consolidated along its 50 and 20-day moving averages, then dropped down here to 728. Which was good. It was holding prior price support, so that's always positive. Then pivoted to the new high up here at 772 and sidestepped. Then it started trading sideways to where we are now at 771 and change. It may close up higher as we've got an hour and a half left in the market. It appears that the SPY really with these candles are kind of standing on a curb here in the last couple of days, looking both ways. We do have a combination of positive news on much of the second quarter earnings season. And then there is the war with Iran, which of course is iffy right now and can be quite a source of volatility. So what do we watch next week? Well, let's keep an eye on the highs here for potential resistance. If we can get over them, good. Maybe not. So we have resistance here at the highs, 722, 723. Then we have potential price support from the highs back here, the prior highs back here at 760, and we've got potential price support at the 20-day and the 50-day at 750 and 747, and then down to 730. Down to 730 and down to the 200-day moving edge. We're going to call it at 703. So with everything we have going on, we definitely want the market. If it has to come down, we want it to stay bullish, and we definitely want it to stay bullish. We want it to stay above certainly 723 is a good level, because we don't want it to break these pivots here. Definitely, and after that, definitely above the 200-day moving average at 703. So anyway, we'll see if fingers crossed work, right? Our next chart is the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows our NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market, including the Mag 7, that whole group. So when I captured this chart today, the Qs was trading at $722, certainly below the all-time high, touched on June 3rd, right back here at 748. Now the Qs are back. See, they made this drop here. They're back now above the red line, the 20-day moving average, coming in at $700, inverted, of course, below the 50-day moving average, which is coming in at 714 and change. And thankfully, still above the 200-day moving average, coming in at 647 and change. Now, if we look left on the chart here, we can see the January consolidation, and it made a high here at 637 right here. And then after that, it dropped down below the 50 and 20 and 50-day moving averages, actually after making a very big run, so we couldn't complain. It fell back down below its moving averages and fell on the news of the Iran war down here to 555. Then it rebounded, flew back up like the SPY did through its moving averages in April and May, and quite a premium to its 20-day, and flew back up to the all-time high at the time here was, or still is, at 748, then fell to 693 down here, rallied back up to 744, and then continued lower. And with the whole time, if you've been tuning into this, we could see it making a triangle here, and we know that triangles either break out or break down, break out to the upside or down to the downside, and this triangle was starting to look a little iffy. And then, of course, it did break down and broke down here to 660 at the end of July. So it rallied from there because we've had so many good positive earnings coming out. It looked like the war with Iran maybe wasn't going to be so bad. We don't know right now. But on the positive earnings, fantastic. It rose back up through its moving averages, and now it's sitting atop the 50-day, back up to where we are now at $722.31. So next week, to measure the Q's strength, to see what's going on, we know we have resistance up here at 728. We know that then that resistance, that price resistance, will be pretty tough here on up to the prior highs here in May at 748. We have potential support here. It's real close, right at the bottom here, at the 50-day moving average coming in at 714, of course, and the 20-day coming in at 700, and then on down to 660, which is this low, and 647, which is the 200-day moving average potential price support. And we want it, of course, we want it to hold hopefully above 760, or above 660. If it does have to come down, we'll see if it has enough strength to rally off the 50 here and come back up to the prior high back here at 748, or if it needs to pull into a rest stop here. The tech stocks, a lot of them have reported now, and that's what drives these. The big tech stocks is what drives this market. So we'll see what goes on, next in this world. So we want it to definitely hold above the 200-day moving average at 647. So maybe tighten up your stops here. Our next chart today is a daily chart of the Amplify Alternative Harvest ETF, symbol MJ. I think this might turn into a good bottom fishing trade. It's unusual. It has only 8 holdings in it. They're all in the U.S. or Canada. The top holdings include, actually there's an ETF within the ETF. So the top holdings here include Amplify Seymour Cannabis ETF, which invests in U.S. Equities that are in cannabis and hemp equities. Other holdings in this MJ ETF include stocks, Tilray, Kronos Group, and Canopy Growth. And Kronos Group actually gapped up quite a bit in the last couple of days. So I looked at a long-term chart, as I always do, of anything I'm thinking of getting into. And it actually made an all-time high in July of 2019 at 547. Wow. And from there, it gradually came lower, as we can see, obviously. When I captured this chart today, the MJ was trading here at $23.87. It's just barely atop the 20-day moving average, which is coming in here at $23 and change. And of course, the 20-day here is inverse to the 50-day, which is above the price pattern at $24 and change. And the Amplify, the MJ, is still below, of course, would be below the 200-day moving average, which is coming in at $26 and change. So if we look left on the chart to get some more information, we can see that when the MJ started the year back here pretty much in January, it was trading at $31, $32 up here, then fell down to this March low here at 21, right down here. Then it rebounded, it gapped up, and it went almost straight up here, so definitely here, went up to a high, gapped up on that day to a high up at 33, then dropped dramatically that day and came back down and fell a little lower, fell down to its 50-day moving average, even below that, heading for 24-ish. Then gradually fell, traded along its 50 and 20-day, then gradually rolled over and fell down in late July, fell down to 21, then pivoted and climbed up to where we are now at $23 and change. I looked at a couple of, I went through about 4 or 5 stocks of this MJ, the holdings of it, and some of them look like they potentially could move higher, and I'll tell you about one toward the end of this explanation here. So it climbed up to where we are now. I like this. I like the setup here. I looked at some volume coming into several of the stocks that are held within the MJ, and it might just be something worth looking at here. So in the coming week, if the MJ can stay above 22, which is right down here, I just want to have something. I want some kind of strategy here in the coming week. If the MJ can stay above 22, I will buy a small position in my trading portfolio. My initial stop is going to be down here at 21.50, and of course that's just below this July low here at 21. So not 21, excuse me, 21 and change. So I'm going to put my stop anyway here at 21.50. And if, of course, you can make yours higher if you want to. If and when the MJ comes up here and climbs above 26, right here, this would be good. If it can climb above 26, by then it may even be above the 200-day moving average. That might have fallen and probably will. If the MJ is coming up, the 200-day moving average will slow down its descent. So anyway, if it can climb above 26, I will add to my position. And of course, by then my stop will be a trailing stop. So you may want to keep an eye and watch the MJ in the coming week. Just for your information, I want to tell you that I also checked out, as I told you, some stocks in this ETF. You might want to check out a single stock called Village Farms International. Please know that earnings will be out August 10th, so you know that. And now please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In our program, How to Bottom Fish Like a Pro, right down here. In our program, How to Bottom Fish Like a Pro, I show you exactly how to detect with high probability how a stock or ETF is about to wake up from an extended downtrend, and actually kind of talking about one a minute ago, the ETF. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever-popular 7 steps to successful trading, here we go, to how to swing trade successfully, that's an all-time favorite, how to trade the trend to profits, one of my favorites, how to read charts, great for novices or people who want to brush up on their chart techniques, how 3 winning setups, great for short-term traders. And by the way, these 2 are only just $59 a piece. Find out how how to bottom fish like a pro, of course. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen or simply click on the orange button below, either one. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.